Y'all boys, trade recap. We had news this morning at 8:30. And then let's go on to the charts. Okay. So 6 move this. All right, so this vertical line marks market open. We have our London session high, London session low, Asian session high, Asian session low. And then if we continue from where we were yesterday, we had taken out, with this huge wick, huge draws on liquidity. Therefore, we would expect we get these equal lows followed by this strong wick, likely taking out draws on liquidity. And then we see that price reacts off of this liquidity sweep, pushing higher. So as we know, this followed into my, I guess, daily expectation of what was going to happen next. So I had seen on the 1 hour time frame that on NASDAQ, let me check NASDAQ. Yeah, NASDAQ was a little bit more clear, but on the higher time frame, we have this 4 hour fair value gap that got filled. But on ES as well, but it's such a small fair value gap. But then as we go into the hourly, it looks almost like that fair value gap was filled. So my mind was kind of on that. I'm fumbling right now. All right. So we had that 4 hour fair value gap on NQ, and then on ES, it was like you couldn't even tell. But we have 9:30 market open. I marked out this 15-minute fair value gap, as well as price had filled into this fair value gap, this 15-minute fair value gap, right as market open, and reacts off of it. And then I was like, this would be a great draw on liquidity. But it actually got filled, so it wouldn't be a great draw on liquidity. So we have another 15-minute fair value gap that gets made off the market open candle. And then I saw price retrace into this candle and react off of it. And I waited for price to confirm. I waited, and it actually was a 15-minute, the 15-minute that I had waited up until. So market open, price reacts off of this 15-minute fair value gap, and then makes a fair value gap of its own in the 5-minute time frame. So then price comes back into this fair value gap, this 5-minute fair value gap, and then I waited for candle closure or consecutive candle closure off of this fair value gap, enter, and then price drew further down. Now my alternative trade, so let's just recap. I know that was it was honestly difficult for me to explain. It feels like it's not as clear right now, as clear as it was before, but so let me reiterate. We had this 15-minute fair value gap that off of market open, price retraced into and reacted off of it. And then, even following that, we had on the hourly. Okay, this is what clears up my bias. This is what I was missing when I was just trying to explain it. Okay, so we had this liquidity sweep. We had equal lows, relatively equal lows. And then price reacted off of, or price made this liquidity sweep targeting London session high. And then we actually pushed past London session high, so we have a break of structure. Man, this is so hard for me to explain right now. Fuck. We make a liquidity sweep, and then we break structure to the upside. And then at 9, it's the continuation where we retrace down and then get the extension to the upside at 9:30. We filled this fair value gap. Even on the 30-minute time frame, you can see we filled this fair value gap, and price reacted. Then we have market open, where price continues to the upside, makes this fair value gap. I had seen that price filled this higher time frame fair value gap, waited for a candle closure to enter. Now that I'm looking at it, what price did, price came up, retraced further down, and then pushed back up. Now, what I would do going forward, or the trade that I actually had said after the fact, after I had gotten stopped out on this trade, I had seen that price came down because obviously pushed me out, and then we see that price comes down. Like I said earlier, this fair value gap got filled, so it probably wouldn't draw down into it, but the entry that I probably would have entered off of would have been something like this. To see that price made that liquidity sweep, retraces down into this fair value gap, reacts off of this, retraces down further because this is a clear uptrend. So, like I was saying, an alternative trade that I would have taken would have been to enter off of the exit of this candle, because it's exiting even this fair value gap, but this would have been a stronger bias, a stronger trade for me. So we have our liquidity sweep, not our liquidity sweep, but we have price on the hourly. We have a liquidity sweep. We break structure, pushing past London session highs. Another thing that could have happened was during 9:30, price could have pushed past London lows, right? But on NQ, we pushed past London lows and then pushed higher. So we had seen the SMT on ES And then on NQ, it looked a little bit more clear that price was pushing it to the upside. But regardless, price came down, pushed past this fair value gap, which I'm totally fine with, because I'm totally fine that I took a trade off of this fair value gap, because price respected the bias, but I just didn't have that. It was only I was only in for 20 ticks, and it wasn't even an optimal entry. I did my best, though. I can say that is that I saw the fair value gap, and then I saw price react off of the fair value gap, so I entered. Price was bullish. But then again, to wait longer to say, like, okay, if we have, let's go on NASDAQ to say, right there's market open. Even to wait longer on ES to say, like, okay, we haven't even touched London lows. So before this extension, it would make sense to get price filled this 15-minute fair value gap that was made earlier. That was at 9:30, though. I'm not going to trade at 9:30. If you were to trade that, it would have been like you'd enter off this candle closure, and then I guess you would have caught the extension. And I lost 250 today. I took one trade, and that's moving forward. That is what. So okay, let's go and what we expected to happen. What would have happened next? And I targeted, and why I took the trade. Why I placed my stop loss at these levels. They were key higher time frame levels. 15-minute. Let's see. There's a draw on liquidity right here. So that could have been a first take profit. Then this could have been the second take profit. These are all-time highs. So it's like a higher time frame trade where I would be in this for a longer amount of time. I got stopped out pretty early. On NQ, we've already pushed past all-time highs. We've made all-time highs. Price on NQ was a little bit more clear today, but I could have used that to my advantage. So even this 30-minute fair value gap was a very, like, to witness this break of structure to the upside off of the fair value gap. That's pretty nice, but you can't take a trade that's not in your strategy, right? So going forward, what I might wait for, let me show you on the 1-minute time frame. This will be easier to explain my trade. I know it's just so hard to explain my trade, is because I took the trade on the 1-minute time frame after using the hourly, 15-minute, 5-minute in my advantage, because if we go 15-minute, so 9:30 and 9:45, we tap into this 15-minute fair value gap, and then we react off of it. To me, this reaction, I was like, I waited for the reaction, and then we scale into the 5-minute time frame, and then we see that price retraces into this 5-minute fair value gap and then exits. But we see that price retraces on the 5-minute fair value gap, and then on the 1 minute, what do? We go down to the higher time frame and wait for candle exit. Wait for price to exit. I waited for price to exit. Yeah, I likely entered right there because, okay, so I entered off of this exit candle for price to push higher. And then I targeted those previous draws on liquidity. But this trade right here, I'd say this trade I did my best for today. I really did my best for today. I had seen this fair value gap get filled and price react off of it. And then I entered. So we had hourly liquidity sweep. Right? So maybe I didn't. So yeah, we had liquid. I mean, this is more of the liquidity sweep. But we made equal lows there. Price comes down, fills into this fair value gap, pushes higher. We get 930. The extension, 5-minute time frame. You have liquidity sweep, break of structure, fair value gap. Fair value gap. Damn, so going forward, to use the 15-minute time frame instead of coming down to the 5-minute time frame, I can come down to I'm going to come down to the 5-minute time frame off of the continuation. I'll wait for the 5-minute time frame continuation. This way, we would see that on the 15-minute, if we followed by the 15-minute, we'd see price 930 make this fair value gap. At 930, we had a liquidity sweep because price was down here. 930, price reacts. Then we get a fair value gap made. I reacted early off this small 15-minute fair value gap. But then we had the previous one that was made through market open. Even to wait off of this, to wait, see if price closes on the 5-minute above the fair value gap, and then enter. That would have been a high confluence trade, an A+ trade. We would have had hourly liquidity sweep, break of structure to the upside, making this making this fair value gap. Price comes down into this fair value gap and reacts off of it. We would enter off of this 5-minute closure. This would save us from that strong bearish candle or this retracement. That would have saved us instead of entering immediately off the first fair value gap that we saw, or second one that we saw, second one that was closest to the current price action. So price retraces into it, exits, I enter, get stopped out, price draws into the first fair value gap, the bigger one that was made, to draw even higher. So to wait for a 5-minute candle closure would have been most optimal. 5-minute exit. Price clearly fills this fair value gap and then pushes higher. Down to 20 ticks. That would be close right there. So another thing too was my risk was 20 ticks. 20 ticks is pretty tight in this market today with what fucking happens. It's like, dude, you got to have a bigger stop loss. That's what I'm thinking. So to have a slightly bigger stop loss of like, because this has been happening consecutively, price barely scratching the stop loss or just pushing us out and still respecting our bias. But so I mean, I feel like it's likely we'll see all-time highs on ES. That might be a PM session though. So later in the day. We've already pushed past on NQ. It would make sense for us to get some relief out of this stretch. So I guess we'll see what happens. But anything can happen. Seriously, anything can happen. This trade could have been a banger trade, but got stopped out. Anything can happen. Apologies for earlier, man. I could not explain my bias earlier, but let me recap it once again. Why I took this trade. So if we scale up to the 15-minute time frame, we have our London session lows, London session highs, Asian session highs, Asian session lows. Price off of market open or during market open makes this liquidity sweep off of this retracement overnight or yesterday actually. And earlier this week, we had been pushing to the downside. And then we go get some relief to fill this imbalance. Before that, though, we pushed even farther than we pushed far as fuck. But then we broke structure back to the upside on the higher time frame to fill this imbalance, take out all these draws on liquidity before pushing higher. But so price fills this fair value gap during 9:30. We break structure to the upside. And then we see on NQ, we already pushed past London lows. That was another. I mean, that is something that also is added into this confluence. We pushed past London lows on NQ, but we did not on ES. We made higher. If you can see, we went up. Well, on ES, and that pushed my bias even further to say that, okay, we filled orders to the downside. It's not likely that we would come back down here. Anything can happen, obviously, but that was my bias. So then we see 9:15. We make this fair value gap as well as this fair value gap in here. So we make this 15-minute fair value gap as well as this small 15-minute fair value gap. But on a 5-minute time frame, as we see that we have exited this fair value gap during market open, we filled, broke structure to the upside, There were all these orders that were going to be filled, bro. Fuck. That's so funny. Going forward, I will see that. That's crazy. So, okay, so market open, price exits this fair value gap, and then during this extension, we make another fair value gap, and then another fair value gap. Price retraces into this fair value gap. Now looking at it, why would price not touch this fair value gap? This one's already been filled, right? So we're good with that. But this fair value gap, this fair value gap, this. Oh my gosh. Not that one. This one, sorry. This higher time frame fair value gap. Man. But price continues this extension while making another fair value gap at the upside. Price retraces down into this fair value gap where we scale down at the 1 minute time frame. And then we exit that fair value gap. You can see through this candle closure. I enter, price retraces, even reacts off of this fair value gap, right? So it reacted off of the fair value gap, but then goes to push more orders to the downside, filling this higher time frame fair value gap. Where it pushes us out of our trade, and we take that loss. But it goes to show to wait longer would have rewarded us, no kidding, because we get this fair value gap. We had this fair value gap, price retraces into it, where we could enter off of this candle closure. A trade like that, this would be okay if I had capital and I wasn't limited under the funded account under the ticks, and if it was a beautiful world, right? This would have been the trade that I was looking for. Targeting this low that was made off of that higher time frame fair value gap. Because why would price push down further? But to even place it right there is tough, because you could have gotten stopped out right there. So a realistic trade, if we were to do 2 risk to reward, we'd have been chilling. Maybe not though, because price reacted off of the fair value gap. But then again, if we would have waited for candle closure, that would have saved us. So if we wait for the candle closure of this exit on the 5-minute time frame. Yeah, boys, let me lock in. So that's optimal. Wait longer. Banger. But this goes into psychology, though. This is like, although I thought I was patient, was I really patient? But then again, I pulled the trigger, and I hope for the best. Therefore, I'm satisfied with the work done here. So With that being said, y'all boys, that trade is getting respected. To target session highs. Why not? Why not me? Why not me? So hopefully we'll have a better day tomorrow, but honestly, I'm satisfied. I learned more today. I'm gonna go journal my trade. I didn't journal the trade from yesterday. But let's go. I'm gonna catch y'all boys later.